Nathan Mark here. Today is Friday, February 7th, 2025. I've got Top Step X up here, and we're looking at futures, the NASDAQ, S&P 500, and the Dow futures. So today was NFP, and historically, I have been using MarketWatch for my economic news, but I'm no longer going to do that. I'm going to start using the TradingView economic news. All right, so today we had NFP numbers come out. Non-farm payrolls. Much lower than expected. And the market did not like that. So NQ is down 140 points. ES is down 20 points. And the Dow is down 133 points. So before speaking on, by the way, it's 9:30 a.m. Central Time right now. We have Fed speakers speaking the rest of today, and then of course the non-farm payrolls is a massive data point that comes out that the markets are reacting to today. The reason why I say I'm switching up my news website is that I didn't see MarketWatch list non-farm payrolls. Farm. The word farm is not on here. And frankly, it's inexcusable. Like, I don't understand that at all. So here I am, and look, it's no one's fault but my own. I have to take responsibility for this. But I thought NFP was a different day. I thought NFP was earlier this week. So anyways, let's go ahead and look at the markets. The first thing I want to do is I want to go into I want to look at yesterday. I want to look at the NASDAQ and what happened yesterday. So yesterday was a complete shit show for me. I traded in the morning, took some losses, posted that video yesterday. And then as the day transpired, I found myself trading on my mobile device and chasing here. Like, I was at the gym during this period. And I've seen this type of price action time and time again, especially when we come into a significant level, right? So this was, the overnight, that's this. So, overnight high, we take it out, we drift back in, come back up to it, and we could not get above, this high. We made a lower high, and then this price action here, it's like a looping, we're moving up, and then it starts to slope. This was a place to go short yesterday. I was long, and I was sitting in all of this nonsense chop for no reason. So this is an important piece to note. Just because the markets are open does not mean that you have to be in a position. Trading is hard because we humans make it harder than it truly is. If you have a system, if you have the discipline to follow your system, if you put the time in front of the screens, hundreds of hours, hundreds and hundreds of hours, years in front of the screens, you get to the point where you're able to recognize just by just your eyeballs, see it. This type of pattern where it's up and then starting to slope, coming into a significant level. Oh, can't get over the highs. It's a lower high. Short it. So that's two important points. Number one, you don't always have to be in a position. It's okay to not be in a position. It's okay to be in cash. This is a prop firm account, of course, so I'm not actually sitting in cash, but it's okay to not be in a position, and it's okay for you to recognize a pattern and execute when you see the pattern. It's also okay to not be trading while you're trying to work out. Nathan. So those are a few key points from yesterday. And then I thought about it even further. So when this market dropped here, I went short down here and I got my ass handed to me. All right. I went short right here. I chased and I got taken out and I lost my account. Now, another key point here about trading. When I say we make it harder than it has to be, that is absolutely true. This move induced hundreds of thousands of traders to go short. Hundreds of thousands. Retail traders, easily. Easily. That is not an exaggeration. That is not an overestimation. Hundreds of thousands of retail traders went short in this area. Now, it's okay to go short when this 5-minute candle closes. Absolutely. It's not okay to go short down here and chase this move. Definitely not. Especially, look, this is a fib level, this red line. Come into it and we bounced out. Look at, so this is real-time price right here. These markets are open, obviously. We've got a Fed speaker right now. Let's see what's going on right now. All right, interesting area, right? Similar to what happened at the close yesterday. Move down, another move down into this level. Can price bounce out of it? And do we want to go long here? Maybe. Just to finish this thought from yesterday. All right. As a retail trader, if I chase this, I'm fucked. Yeah, maybe you get lucky. Maybe I get lucky and the market just keeps moving down forever. What's the probability of that? It's low. It's low. Now, it's okay to go short here. And then look, huge flush. Imagine catching that move. 798 to 730. That would have been nice. Now, if you wait for this 5-minute candle to close, I did not. Again, I went short here and I got my ass kicked. If you wait for this candle to close and then you see this candle here, this green candle, well, this is a turn candle. And then you see this candle. Oh, this candle closed higher than this. This candle closed higher than this. And we push right back up into the 8. There's a retracement, but then, oh, boom, this candle closes above the 8. What can we do here? We can go long. And then what we can do, we can trail a stop, trail, 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 trail. Whoa, look at that move. So a few key points here. Number one, do not chase. And I know this. I've been trading for a few years now, futures. Key point, do not chase. Be patient. All the dumb retail traders are chasing. You are not a dumb retail trader. So that's number one, do not chase. Number two, follow your system and have confidence in that system. My system says if there's a strong close below the 8-period moving average, above or below, you enter a position because there's a high probability of follow through, which is exactly what happened here. And this is a turn signal, this candle, that this move is, close to being over, this down move. When this candle closes like this is a strong move back to the upside. And then you wait for a candle to close above the 8-period moving average, you take your long position. Okay, so that's number two. Follow your system and trust your system. And then point number three is you have to have bullets. You have to have bullets in order to take a shot. If you chase moves and get your ass kicked, if you enter positions when the market's just chopping around and you're getting your ass kicked, well, you're going to waste your bullets. And that's just silly. That is unprofessional. All right, so save your ammo. Save your ammo. Save your capital. Protect your capital. You have to have ammunition in order to catch moves like this. That simple. So that's number two. Save your capital so that when a move that we want to enter, okay, when save your ammo so that when there is a move that transpires that is just beautiful, that's offering a great opportunity, you're able to enter and take part in that move. A few other thoughts too from yesterday. It's like I was just frantic. And when you enter the markets and you trade and you need the money, it's not the best place to be mentally. Because then you feel like you always have to be in a position, you have to be trading, right? That's not where you want to be. You have to be patient and wait. Okay, then you can make some money. But when you feel like you have to make money, it's not a great place to be at all. So no need to be frantic, just be patient and then you can catch moves. Now, this, according to our system, look, doesn't this look similar to what we just looked at yesterday? This close, we should be long, okay? Now, I don't love this huge wick here, but, we did come into this level and we bounced out of it. Oh, also real quick from yesterday, today was non-farm payroll. Perhaps if we were aware of that, and I should have been aware of that, we would have traded differently. Because this number is so significant, that NFP number today. So from here, look, we've got this area right here. We've got to push through this. Markets are down. NASDAQ's down 100 points. YM is dropping further, down 126 points. Right? So it's okay. Look, because I'm human, I have an edge. I can say I don't want to enter here because we have a Fed speaker speaking right now, and NFP just came out, and this looks like it wants to drop further. So I'm not going to go long. It's okay for me to say that. Now, if this candle breaks and closes green, then I'll go long. Okay. Another key point here is as far as patience and confirmation. Well, if moves like this happen right here, starting from this, let's say we enter when that candle closes and we trail it, it's 100 points. If there's a 100-point move, why not wait for confirmation? Like if the market's going to move 100 points, why not wait for confirmation? So when this candle closes, that's a signal that there could be a long. Then when this candle closes, boom, then we enter, and the stop is here. So, you give up, what, 10 points or so just for a confirmation? Okay, it's one thing that I want to improve upon, is just waiting for some confirmation like that. So that's why I say, looking at this, what's happening right now, I would like to see some confirmation. So this candle closed, technically it closed below the 8-period moving average there, right? So if we want to go long, I want to see confirmation to the upside. If we're going to go short, I want to see some confirmation to the downside. It's that simple. I can say that, so this is the first week of February. I had goals, trading goals. I am not hitting my goals. I did hit one of my goals, and then I broke my trading rules, and that goal is no longer feasible. My goals for the first week of February, no longer feasible. And it doesn't feel great. Does not feel great. I had the goal. I secured the goal. I hit the goal, and then I lost it. So here we are. We're going to continue to work towards acquiring funded accounts and payouts in February, of course. Going to keep at it. Going to keep at it. So we'll watch here. Depending on how this candle closes, this could be a place to enter a position. It's almost 10 a.m. I've noticed that, after the market settles in, let's go into an hourly chart here. Wow, look at that candle. Okay, so, on a strong break below the hourly or the 8-period moving average on an hourly chart like this here, price tends to retrace but stay below the 8-period moving average, right? So look, when this candle closes below the 8-period moving average, I mean, there's a high probability that this is going to stay below the 8-period moving average and just drift lower on an hourly. Now, if we zoom back into a 5-minute where I execute trades, well, there's room to go long. There's room to capture that retracement, that retracing, right? But I have to keep in mind that on a higher time frame, there's a high probability that price is going to continue moving lower. Look at the heat map. Here's the daily. Nvidia's still getting love. Google is just getting hammered right now, man. After their recent news. So marketplace is neutral to to down for the most part, but look at these. I mean, there's a lot of names that are up. Alibaba's up, Dell's doing great, SoFi, Airbnb, nice pop. Bitcoin's up today. Snowflake is up, CrowdStrike is up, Meta's doing great, Nvidia's up. Mixed bag here, mixed bag. Okay, another 5-minute closed, and that was a great close above the 8-period moving average. All right. Great close above the 8-period moving average. Long. My stops are down here. What I'm looking for here is a reversal. Okay, if this drops and takes me out, so be it. But I'm looking for, a steady reversal back to the upside here because we're trading above the 8-period moving average. A few things I'm going to do here to manage this trade. Let me get rid of these drawings. Number one, if this gets a pop, I'm going to move my stop up below this. I'm going to move my stop up to 68.5 area. I want to see if we can get a move that I can trail up. I have to keep in mind that there's a 21-period moving average at 834-ish. Okay, so like right up here, this area. Price does like to push into an area like that and bounce out. Just got higher than this candle here. It's been interesting to look at a 1-minute chart too. Moving my stop up. It'll be a 17 tick trade at the very least here. 17 tick winner. I don't typically look at the 1-minute chart. I actually want to get out of there. Go back to the 5-minute chart and focus here. So one thing that I want on, wow. Look at that. Holy shit. One thing that I want to improve upon is taking the small win. All right. So when the market offers money, this is a trading combine. It's a prop firm challenge. This is not real money. When you have a funded account, that is real money. If you trade well and you are funded, that is real money. So the $300 winners That adds up. $300 winner adds up. If you make $300 a day for 5 days, that's $1,500 a week. That's $6,000 a month. So long story short, I want to get better at just moving my stop up like I did. Okay, I went down into the 1 minute. I trailed my stop up and said, hey, here, it's a 17 tick winner no matter what. And then let's talk about this move. Holy shit. This is the type of veracity, violent move that has been happening quite often the past few weeks, certainly the past week, since you know who has been in office talking about tariffs, dismantling agencies within the government, etc. That is not helping with volatility at all. I guess it depends on how you look at it, though. As a futures trader, I want to see the volatility, but it can be dangerous. It can be very dangerous, is what I'm trying to get at. Look at this. Vroom, vroom, right back up. So this is, and look, we have the Fed speaker talking right now. It's 9:55. Look at that. My goodness. And by the way, all the indices look the same right now. NQ, ES, YM. So when you have a Fed speaker, you know, there can be a jolt of volatility very easily. They say something and then wham, price reacts. All right, I'm going to end it here. Thanks for watching. Have a great Friday.